Hello guys, it's Randall with Bitraged. So I'm going to do a market review for the week ahead. I decided to do it today on Monday instead of Sunday for two reasons. I had a meeting yesterday, so I couldn't really do it, and I figured it might be better after the spreads calm down and we get the volatility out of the way to look at the market then. So we're looking at the DXY. We're going to start out with the DXY, the Euro Dollar, the common pairs that most people are looking at. Thought it'd be helpful to remove all the drawings on the chart and just look at the price action, just look at the candles and analyze what is going on. Sometimes you can draw on the chart and it can actually hinder and handicap you. So sometimes it's good to just hide that for a minute or even delete it completely and just start from scratch and look at what it's actually looking like. So if you look at this, overwhelmingly this is corrective. Overwhelmingly it's ascending. And if you look at it, you have this impulse, correction, impulse, larger correction, impulse, and then it rejects. After this rejection, most of this has been ascending, drops down, ascending, it drops down, and ascending. So ascending channels, multiple ascending channels. When we see that, it gives us the understanding that we are going to see a big sell, most likely. That's the highest probability. But the market keeps rebounding back. So this could have happened here, that could have been the sell down, this could have been the sell, that could have been the sell, but it keeps rebounding and moving back up. So most likely that sell is still going to happen, and we aren't really looking for long-term upside at this time. That could change if the chart shows us something different. So that's what we're looking at. If you look at what I have for the chart, large ascending channel. This last part is an ascending channel within an ascending channel. But what's probably most interesting or most relevant is this last piece right here. Okay, so we have an impulse, and out of this impulse we get this kind of crazy corrective, very corrective situation. Now, you could see this as a flag to move higher. If this comes back down and rejects here or at the trend line, that would be something to look at. Or we could be looking at it as this is a rejection and this is a bear flag to move lower. Either way, to see this move to the downside is very probable. Dropping down here to the 1 hour. Actually, let's look at the 4 hour quickly. So we look at the 4 hour. We got this really corrective arcing nature. Now, if you've gone through the course, you know that these type of arcing natures tend to sell. But however you look at it, this is the type of formation, a corrective arcing nature like this is bound to sell. Now, it can sell here at a third touch. We are seeing this rejection, but it doesn't have to. It could move back up here, reject there. If it moves back through here, how it moves is important. So we're just going to keep an eye on that. If we look at the hourly, so this is something you have to keep in mind. So we get this rejection here. So this is an impulse, and we start to get this flag. It's a decent flag, but it breaks down. And it doesn't break down because that flag was invalid, but rather because it was forming a bigger flag. You see this is a double bottom. So impulse, correction, bigger flag, then an impulse, a tighter flag, an impulse. So with that in mind, this is here is either a really steep flag, which I tend to not take as often, or it's a third touch rejection. And if it is a third touch rejection, we're just going to be waiting to see if this corrects out like this as a bear flag. And if it does that, or even if it does a double top, those would be great entries to take for a sell. Obviously, we'd be buying the Euro Dollar. So that would be what I would be looking at. To keep in mind, if this continues the impulse down and then forms a flag, that's even a better sign, even a better probability to get in. Anything that breaks this area and forms a nice flag would be a good indication. So on the euro dollar, I have this ranging area, this larger ranging area, and then this smaller ranging area. We did break down out of this area. We broke this low here, and we formed what appeared to be a possible flag, but like I said, this is very tight, and we're just starting to see some rejection candles. I personally would not be taking a sell on this. It's just too risky, and we don't know that it's going to actually sell from here. So if you were going to take a sell, if this moves correctively up to here, and we get a double top here, that would be a better area to sell. Or if it forms a larger flag, let's do something like that. If it forms a larger flag, get in on the top here, that would be where I would enter. Confluence is a very important thing, so if we do get this type of situation and it moves close to or touches this double top area, it just adds a lot of probability to the factor of a sell. If we don't get that and this kind of just drops out, just wait for a correction. As far as buying this, the same thing as we were talking about the DXY. If we get a corrective movement down, preferably to double bottom and a rejection, that would be someplace to consider a buy. Keep in mind, even if we do get that arcing double bottom here, it is in the middle of nowhere. The only thing we have confluence is this area here. I would prefer a rejection here. So if this is going to move back up, the best place to buy would be at this double bottom, or triple bottom would be triple bottom. So keep that in mind. You can buy a double bottom here in the middle of nowhere, and they do work sometimes, but just keep in mind it could be just that. And it's just forming a flag. And it doesn't have to come up here. It could just do that and drop. So just keep that in mind. If that's in your strategy, I recommend not taking more than 20% of your trades as the lower probability. So like a middle of nowhere trade. And try getting 80% of your trades to be the high probability trades. And then you'll notice that you have less losses, more wins, and it will offset that that loss factor. So that's euro dollar and DXY. Right now, we will be seeing some moves on the euro dollar, but right now there are better opportunities in other pairs, and just be patient and wait for it. Don't try and catch the bottom. Don't try and catch the top. Don't try and catch every move. Just wait for it to actually happen, because right now you see this pattern here. It could be just forming another descending pattern, as we see here, descending, 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 and we could just keep doing that. So keep in mind, you don't want to get caught in these up and down movements. Okay, there's a lot of opportunity in the market. We don't need to do that. All right, so British pound dollar is a little bit different than euro dollar. Similar, but still different. Descending broadening wedge, we are at that third touch area. You could even say fourth touch, although I just call those double bottoms. We moved off from the double bottom very impulsively. We formed this kind of ascending correction, and we moved off from that. Once we got that correction, we formed an ascending pattern and dropped out of it. And we're looking for this to possibly double bottom at this area and then continue its move up. As you'll notice with this pattern here, it doesn't always need to completely double bottom. So it may continue from here without double bottom. It doesn't have to. On the 1 hour. Now, the momentum is the upside, okay? So very impulsive. We got this bigger corrective pattern, impulsive, and then we're forming this somewhat ascending pattern. But keep in mind that it's also impulse, correction, impulse. It fulfills the pattern. So we do get this nice impulse. It breaks this low. It forms a kind of weird corrective pattern with a double top here. And then it drops out. This is coming off as a descending, so if this continues like this, I'd be looking for a buy. However, that said, if it drops out, I would be most likely considering this is going to continue to sell. It's going to line up with the DXY if we get any decent moves on the DXY. So if the DXY just kind of fools around, then you might not see much on the British pound dollar, or it might just do its own thing. But if the DXY moves big, you're going to see British pound dollar move as well. So if this drops out and it breaks that area, I'd be looking for correction flags to continue down. However, any kind of corrective movement to this area, even a break, and I'm looking for a potential if there's a rejection and a setup for the upside. That's what I would be looking for on the British pound dollar. Just keep an open mind on this pair, as, like I said, it is impulsive overall. We are moving to the upside overall, but it doesn't mean this can't just be a flag to continue lower and then we double bottom at this area and then move off. So dollar yen, it's an interesting let's look at the daily here. So on the daily, we are in this descending pattern, and we do break out of the descending pattern but break right back into it. So it's a false breakout, and we're breaking down lower in the time being. So right now we're looking at sells. We look at the 4 hour. Actually, skip that. We look at the 1 hour here, and you'll see this. We have this move up. We break out of the move, and then we start forming a descending or a bearish trend. Okay, so very nice flag there. Another flag here, a tight flag here, and a flag that I took today on dollar yen is this flag, which after what it's formed now, it's double bottomed. If you look at here, it double bottomed there. It hasn't broken the low yet, but it double bottomed. And this inside pattern, it's not the best as far as I wouldn't have known this, so there's no way for me to know this. This is a hindsight thing, but when I see this in hindsight, I know that there's more probability because of this impulsive movement that this will break out and tag me out. Doesn't mean the trade is off. It doesn't mean it was a bad trade. It just means that there's still the possibility of me getting tagged out before this moves down, especially considering that the yen pairs have all kind of come together today to form flags, but they're moving higher before they're probably going to break. So just be careful. And it's one thing I want to say is if you see three pairs with same currencies, so maybe dollar yen and Aussie yen, forming the same pattern, bearish flags, you're not going to want to take both of them, because if it doesn't work out, most likely you're going to take a loss on both of them. That's a 2% loss where it should have been just a 1% loss. So we don't do that. But so this is the trade that I'm in right now in dollar yen. We're going to just see how that works out. But it is a flag. It isn't a downtrend. There's nothing wrong with this entry. It's just really close right now to my stop, and my stop is really tight at 15 pips. And I do that just because, the risk reward is pretty good. In dollar yen, I tend to be able to get away with it. So that's it. Dollar yen, I'm still looking for downside. Obviously, I'm a little biased because I'm in the trade. I'm still hoping that works out. Even if this moves out, takes me out, and moves back up to here, it's probably still going to sell. That happens an awful lot, and there's no reason why that can't do that. So just keep that in mind. If it moves back up and then breaks down, just look for those corrections to get a sell on it. Don't get put off by the move back up. It's still a flag. It's just retesting that area. All right, so here's British pound yen. Just giving you another perspective from a different yen. You have this descending pattern. What's interesting about this descending pattern is it does fall out, but it falls out in a way that should be very much expected, because impulse, this correction, it moves up, and then as it's moving off to form what people might consider, probably a bull flag, you end up getting these double, triple, and then quadruple bottoms. And when you see that, the chances of this breaking become greater and greater and greater every time that it bounces on this area. You get rejected, but you're not making any movement up higher. So even though the pattern looks descending, and we'd be saying, okay, well, that's probably going to move to the upside. It looks descending, but really what's happening is you're getting rejected on the bottom, but you're forming lower highs on the top. So you're not making progress to the upside. You're getting rejected on both sides, and it eventually just falls out. This is on the daily. If you look on the 4 hour and the hourly, you'll generally get more perspective on what is going on. Once we form this corrective movement, it falls out from this flag here. It moves down, it arcs and double bottoms. We see that a lot on the bigger patterns. It moves off, and now we're just forming what appears to be most likely either a bigger correction or a rejection. We'll look at the 4 hour. So if you look at the 4 hour, we have this ascending pattern. We drop out of the ascending pattern, we break this low, and we're forming what appears to be a flag. We look at the hourly. That flag sold, and we're forming another flag after the break of this. So right now, the probability is weighted on the side of at least temporary downside. So if we get any kind of a move up here and a rejection, I would be selling that as a potential drop. It is possible that this either forms a corrective movement down and moves off, or it's possible it rejects here and moves up. That's possible, but the probable is definitely this to complete as a flag and move lower. It's not ready yet, and I wouldn't take this entry yet, but it's something that you should look at if you're considering trades. If you look at what we have here at the top, this was a very clear pattern. I mean, you really don't get much clearer than that. I mean, this doesn't touch the trend line. I know that puts some people off, but that's a double top. It just breaks and we get the rejection. So if you keep an eye on these, they don't always work out, and you have to be careful with the rejections because you'll get a lot of rejection candles. But that was a clear pattern, and so to see this ascending pattern and then a very impulsive move corrective and another move down, it weights the downside. It weights in favor of the downside. So to see this move down at least a little bit further is expected. Okay, so British pound Kiwi, I got taken out of this trade for 675. Actually, I believe that was only on my demo account. Yeah, that was not a live trade. So, and I'm not really sure why I didn't take that live, because that was a really, really good trade. But yeah, that was not a live trade. That was on my demo account. So this moves up, moves off, and then it breaks down. That was a tight flag, and if you look on the 15-minute, you'll see these little clearer. We break this bottom, this lower high here, and now we're just looking for this to form a correction, a flag to the downside. So British pound yen and British pound Kiwi, whichever one forms a better entry, I would be looking for that one to get in. And one of them should eventually here, but this is looking for downside overall. We are looking for the downside. If you look on the daily, we are at a double top area. We have a heavy rejection on the daily. Obviously, we need to complete this on daily candle, but that's a heavy rejection indicating downside. So even if this is just going to be a flag to move higher, most likely there's going to be opportunity on the lower time frames to get a couple buys or sells. All right, so Euro Yen, you have a descending pattern. This is a situation where you had this starting out, and you would be expecting more of that style of it descending. And what happens is it just falls out. But in the process, it forms this steeper descending pattern, forms a descending within a descending. We break this low, and then we move off and we move to the upside. But unfortunately, we didn't have enough momentum to break out, and we're coming back down. We don't have to hit this area. However, if we do, a rejection in that area or just a little lower is expected. If we look at the 4 hour, I'd be looking at this area for rejection and also that area for rejection. So this could form what appears to be a flag, and I'm not saying you shouldn't take it, but just keep in mind that it could be a short-term sell here to rebound. It doesn't have to. It could keep going, but just keep in mind if it is going to rebound in that area, you're going to want to take some profit. So just keep an eye on that trade. If we look at the hourly, on the hourly, it is forming a steeper but a decent correction. This was a good correction. It worked out very impulsively. I would be in this trade already, but I'm already in a trade and it's not at break even, so I'm not going to take a second trade on that pair at the time being. So as it stands right now, we are looking for this to move down further, even if it is just to double bottom and move off. However, how we get there and what happens when we get there will tell us a lot about the sustained movement. For Aussie dollar, we are still in a downtrend. We're just forming some bigger and sloppier corrections. That was almost a perfect double top. And for this, I would prefer, if you look at this, you put in a trend line here, it's right on that trend line. I would prefer, if this had moved here and double topped, that would be the best entry. That'd be my preference at the time being, if you had not taken this rejection here. But this is, in my opinion, still most likely to continue lower. It just looks like it may have a little potential to develop out a little further, whether it rejects there or corrects a little bit longer. But you'll want to keep an eye on that if you're looking for an entry. I'm not going to take this entry at the time being. So I want to take a look at a couple pairs that are more corrective, because I think that we need to look at pairs we need to be careful on as well. So you could take this and move that here, and you could move that over like that, and that fits better with a parallel channel, which I like parallel channels. We don't always get them, but I do prefer them. But if you look at this pattern, overwhelmingly, this is corrective. I don't want to get involved in this type of pattern. So when we got this triple top area, I would not have taken that retrace, even though it does look like a evening star formation, and even though it would have worked out in profit, you would have been fine. And if it's in your style, that's fine. We all trade a little bit differently, but I would not have taken it, because even though this is somewhat impulsive, this whole pattern is largely corrective. So this could have done that, moved up. This is how dollar CAD runs. You'll look at this and it's very just choppy like this, and then big moves, and then choppy, wicky, swinging, big moves, and then corrective, very corrective, a big move down, corrective, a big move up. It's kind of how dollar CAD runs. So dollar CAD can be very, 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 very profitable. You can make a lot of percentage on dollar CAD, but also if you're trying to catch all the tops and bottoms, you're probably going to lose all that profit. So definitely, if you get good entries, trade them. A good entry on dollar CAD would have been this double bottom. That would have been a good entry. Those type I would take all day long. If you have a third touch pattern, that would be an entry. We didn't quite get a third touch on this ascending. If we had, I would have taken that. The flags, if you get a nice flag, you can take as well. But just keep in mind, If we do see this break out, I will be looking for flags to take on this pair. But as long as it's in this ranging area here, which is basically this, I'm not even considering a trade on it. CAD yen is another one. It's just another CAD pair that's really corrective right now. The thing with corrective pairs is you want to pay attention to them, because often, like this one, they are in bigger either descending or ascending patterns, and they are going to move. So you don't want to be like, you know, check it a week later and realize, okay, that moved, you know, 600 pips. You want to keep an eye on it. Just don't take trades within this area, because it's not going to work out for you. So if we get this, it moves up, we get any kind of correction on that trend line, I prefer after a break of the trend line. That's my preference. If they work out better, then I would consider that. A break and then a correction is just going to be a really good trade. Very high probability. I would consider that. And we'd be looking to this area as the 90% rule. And obviously, if you look at the daily, we'd be looking to up here around 82, 837 or somewhere around there for a double top, and possibly much higher, because you have this large descending area. So we could even go up to 85,227. EuroCAD, another CAD pair, and there's a few of the other Euro pairs, Euro Aussie and Euro Pound, are also moving very correctively as well. But they are going to move, so keep that in mind. So we have this very sloppy move up. We get this ascending triple top. So triple top. This is a triple top pattern at a double top area. It's extremely high probability with an evening star. One of the best trades you could take in the Bitraged trading method. Just high confluence, just double top, triple touch of an ascending pattern with an evening star. Just a really good pattern. I would get in on that retrace, and I would stay in that as long as I could. So that would have been a really good trade. This is moving down to the downside, but it's also moving somewhat correctively. But it's not as choppy as this area either. So if you can get in on a flag, like this flag here would have been a really good flag. I probably wouldn't have taken this flag, but I would have taken this one. That would be a good entry. So look for those. And keep in mind that as we're moving correctively, this is in a descending channel, and this could at any time break to the upside as well. So don't get too biased if you're in profit. Be ready to flip your bias as well. If you do end up in a trade, look for this area as a rejection or a move off to move to the upside. So that's some of the pairs that I'm looking at for this week, some of the things to keep in mind. This is not meant as a signal service. It's meant as a overview. Some things to look for and to consider. You know, keep an eye on this, watch for that type of situation. Obviously, as things progress, things can change. Obviously, if I see an impulsive movement on a pair and it's formed like that, I'm going to expect this is most likely going to form a flag. However, if after the video it does this, then that becomes a descending corrective pattern, and it could break the upside. And you might say, well, you were looking for a sell. You were only looking for sells. Yeah, there I was only looking for sells. But as it develops, as this develops out, it slows down. The momentum slows down. It becomes very corrective. And maybe we get that 1, 2, 3rd touch here. Then we'd be expecting that to be a potentially that to reject and move to the upside. And I think this is where a lot of people really get caught in the market and lose, is not that they really don't have the ability to understand what the market's doing. It's that they get biased. They see that and they're like, you know what? That is a flag. And I'll admit, it looks like a flag. But what if it starts doing that? Then that's just a corrective ranging period. And you might have looked at this as a flag and you're looking for that area of rejection here. It never happens. So forecast, look for the possibilities, look for the probabilities, write it out on your chart. But if it doesn't happen, then adjust your view to what the chart is saying and say, look, you know what? I was looking at sells. Don't keep chasing and be like, well, you know what? I'm going to take that just because I'm only looking at sells. What if it doesn't reject there? What if it keeps going? What's your reasoning for taking that? There is no reasoning. There's nothing in this that I've drawn to take that as a trade, at least as it stands. You know, you just have to keep that in mind, that there's always going to be new information given in the market as the markets progress, as the chart develops out, and you need to be watching for that. If you're not a part of the course yet, I highly recommend that you join the course. We will be adding new material over the next couple months, and we also will be changing the membership. So all new members to the plan after October or possibly November, it will be different. We're not sure how this is going to happen, but we're going to change things. We're going to work to make it more targeted and more in line with our core principles, which is mentorship and building a community of successful, highly motivated traders. So if you're motivated, you are determined to become a successful trader, then I encourage you to join Bitraged. If you're just looking at this as a hobby or whatever, then just watch our videos, enjoy the content, and gain as much as you possibly can. We're glad to have you here. If you all are already a part of the course and you need anything, please let me know. If you are not a part of Slack yet, but you're part of the course, let me know, and I'll get you access to that. Thanks so much for watching, guys. Please comment below with your thoughts, your comments, your suggestions, and feedback for the week ahead. What are you looking at? If you're looking at commodities, or if you want me to review a specific pair, please let me know, and I will do my best. Thanks so much, guys, and take care.